Pre-Lubrizol, we estimated Berkshire's year-end 2011 cash balance could approach $60 billion. I believe you commented recently on an elephant that you thought was too big. What is your acquisition appetite? What size is too big? Has the phone been ringing lately? And what, if anything, can we as shareholders do to help?
I got through college answering fewer questions than that, but anything you can do to help, I appreciate, Glenn. It's hard to name a precise figure. This one, was way too big, except unless we used a lot of stock, which, like I say, we wouldn't do. Our appetite is always there. We are not going to borrow a lot of money. We're not going to issue shares, except perhaps in some minor amount to make a deal that couldn't get made otherwise. And we obviously will never sell a business to buy some other business. So, our cash balances will tend to build month to month unless we do something, and we can and will sell some portfolio securities. But doing Lubrizol requires close to $9 billion of cash, and obviously we could do another one of that size. In fact, we're looking at a couple, but they're no more than a gleam in the eye. But they would take sums roughly similar to Lubrizol, and we would be comfortable doing those, and they would add significantly to Berkshire's earning power. So they're worth doing, but we can't do a really big elephant now, and we won't stretch. We've never really taken any risks because we don't need to, and we will not trade something that we have and need for something that we don't have and don't need, even if we kind of like to have it. Charlie?
Well, I certainly agree with all that. We are very reluctant to issue shares, and in that we're different from most places. I have a friend that sold out to a socialist country, and they issued shares in a controlled corporation, and the socialist executive said, "Isn't this wonderful? We're getting this business for nothing."
Yeah, some people really have that. And of course, there are some companies, and we talked about the wave that took place in the late 60s, but periodically, and certainly it happened during the internet period, where companies just couldn't issue shares fast enough because they were trading confetti for real assets. And that is a business model that has been applied successfully for some periods of time by certain companies in the past. It usually ends in some kind of a fiasco, but, well, I shouldn't say it usually does, but it runs out of gas at some point. But essentially we've never been in that game. We hate issuing shares, and the idea of selling when we issue shares, we're divesting ourselves of a portion of every wonderful business we have, from Geico to ISCAR to you name it. And we don't like doing that. We like owning those businesses. We like to own more of them. We have a deal, for example, on Marmon, where we bought some more of it this year, and we will buy the rest of it in a few more years, and we feel good about that. We pay a fair price for it, but we get a business we know, a management we like, and that's really what we'd like to continue doing at Berkshire. In fact, we will continue doing it.